All right. What is going on, family? Happy Friday. Man, we just gonna groove out till everybody get in and we get on. Man. So while y'all, while we getting there, give me some water. Man. Man, hope y'all had a good, productive week. As Uncle Vin from the YouTube channel used to say, man, hope y'all had a profitable day. Right? That's the whole point. We always want to be profitable. So, yeah. Kevin, I see you joining, man. Welcome. I appreciate you being here. Bree, welcome to you, man. You know, you're going to be checking in soon. So glad that you're here. Yeah. How's everybody doing, man? Y'all got to check in. Y'all got to talk to me tonight. Even though we having conversations about taxes and everything, want to try to make it as interactive as possible, man. Tonight, if you feel like you want to join me, you want to come in on and join the video, please feel free to do so, because we just gonna talk about it, right? We just gonna get there and have that conversation. So yeah, we're gonna let the music play a little bit while everybody checking in. So Sweet C for God, I see you. What's going on? Welcome to the live Friday night financial Friday something or whatever we want to call it, right? We just here gonna chill out tonight. A little different vibe, right? Man. So real quick, what are we talking about, man? I got so many things I'm going to be experimenting tonight. Yeah. All right. So first of all, let me do, for those of you who are here live, man, trying out a bunch of new things. If you can hear me okay, if you can hear everything, if you can hear this music, do me a favor. Give me a thumbs up or do whatever it is we do here on Instagram. I don't even know what it is, right? Just let me know that you can hear me as well as see me, right? I just want to make sure that you're right, because every time we try new technology, new things, right? Want to make sure that I can be heard as well as seen. So if you can hear me, by all means, let me know and we can get busy. Yeah. You can really turn out, man. Got this. Add one tax prep, man. Hey, good to see you. Glad that you here, man. Like I said, I'm inviting people on. We're going to have conversations about you being a tax professional. You can actually come on here and join in on the conversation. I'm sure to you understand this shirt, right? A tax season survivor. I know with Instagram, everything is backwards and everything, right? But man, we survived it. Tax season is over. Well, it ain't over, right? Like we as tax professionals know that just because the deadline was Monday, right? May 17th, it ain't over, right? We still have those of you who have not filed yet, right? Y'all still gonna be knocking on the door saying, hey, I need to get this done. We just know that come May 17th, we got to slow down a little bit, right? Well, we still going to have those individuals that's going to be straggling in, the ones that filed the extension that didn't get their taxes done, and now they want to come, say, around towards the end of October and be like, okay, I'm ready, okay? Yeah. I won't say that was a rough one, implementing some of these new things, man. That was one of the greatest challenges, at least for me as a tax preparer, was having all of these laws that took place mid-year, right, in the middle of the tax season. First, tax season started off late, right? Normally, tax season starts around maybe the first week of January. IRS pushed that way back to the middle of February, right? So just starting off the gate, we was pushed behind the line, right? So it was really very interesting out the gate, the tax season was. Then outside of that, all the changes, trying to figure out PPPs and everything like that. So that's what we're here to talk about tonight, man. I don't want to be before y'all long. I see everybody coming in. Royal Joe, I'm glad you made it. I see you. Miss Christine, I'm trying to press the wave button. Y'all don't know if it's going to let me do so. So, yeah, we do that. I don't know what happened, but okay. See everybody here. So, man, let's get to it. I tried something new, right? Like I printed backwards on paper because I know like right now, like even my shirt says Tax Season Survivor, but it is backwards to you, so you can't see it. So I was trying to be creative, and tonight I got us a title thing, but I did it backwards. So how about this, right? This is the topic, right? Can we see that? This is what we're going to be talking about, unpacking your tax return. So the reason we're talking about unpacking the tax return is because this year, specifically this tax year, Add One Tax Prep agreed, like it was definitely an interesting one, right? We as both as tax professionals and taxpayers, we saw a lot of things happening and we had a lot of come to Jesus moments, right? Like this year, in my opinion, was the year that everybody realized the importance of having a tax return. Like this was the year when people realized, like, man, I really got to have my finances in order, right? Because your tax return tells a tale. Your tax return tells a lot about you as an individual, right? Your tax return is going to tell us whether you are financially sound or you are fumbling financially, right? Your tax return tells us that you are you're either in tune with your finances, meaning you got a good grip on what's happening with your life financially, or you don't, right? That's what a tax return tells us. And it became clear to a lot of people, and especially my business folks, right, that I really need to stop playing with my taxes and get it together, right? Because a lot of people got disqualified or could not qualify for a lot of these grants that was happening because the tax return was not in order, right? The books was not in order. So all of this money that they had, all of this billions and trillions of dollars that they were just giving away for free, half the people couldn't get access to it because, well, this tax return right here wasn't in order, right? So tonight we're gonna kind of talk about that. Like, what were some of the lessons that you learned? Some of the aha moments that the moment you realize, like, man, I really got to get my taxes together. I really got to get my finances in order. And even for me, right, it was some great eye openers for me because this year took on bunch of new clients, man, a lot of high earners. So I've seen some from the entire spectrum, right? Like I've seen W-2s that had maybe $3,000 on it versus W-2s that had $720,000 on it. And it's amazing to see that spectrum from where I'm sitting and to see like, well, why is one person earning this amount versus the other person earning another amount? And really, the only reason is the grasp that we have on our financials, right? So again, the goal for tonight is to unpack your tax return, right? And forgive me, I'm going to try to read the comments as they go. Like I said, I'm inviting people. If you want to come on here and hop on and join me and we can have a discussion, feel free. Tonight is the night to do it. So, but before we even, decide to press the join button, or if you want to get invited, let me know. Like I said, I'm going to try. I see buttons down here on Instagram, but let's go ahead and let me kind of get through some things first. But I see questions. Let's see here. World Jewel 2 says, when will the amended 1040s be processed? Mine was done March 18th and still no update. Man, great question. Glad you asked it. And here's the y'all, please be patient with our, right? Because they belong to both you and me. Please be patient with our IRS. There is a lot of things happening in the IRS, budget cuts, where they wasn't fully staffed due to the pandemic. A lot of people were not working, right? So they're trying to play catch up. And I don't want to laugh, but this was funny to me when I read it, that the IRS ran out of ink. No, I don't know how to really say it, but the IRS ran out of ink, which caused a lot of delays, especially if you turned in an amendment. Most time when you do an amendment, they are going to send you a paper check, but they ran out of ink to print such checks, right? So, and it's funny, I haven't heard any updates since I received that message that the IRS ran out of ink. So they're having difficulties printing information. They're still processing tax returns from 2019 that they still have about a couple 100,000 that they haven't got to. So we have to be patient with the IRS this year. Right now, Biden has said that he's going to give the IRS some money, a couple of $1 billion. But here's the thing, and we'll kind of talk about this towards the end, that billions of dollars that he's about to give them for part of their budget is not to enhance the workforce or to get things going. That is going to be so they can up the enforcement side of the IRS, right? The IRS is tired of the fraud that's going on. They're tired of not being able to collect what's due. So they're about to invest a lot of money in the enforcement side of IRS. So that's what I say. We really got to unpack our tax returns. We really got to tighten up our finances so we don't get caught up on the enforcement side of the IRS, right? Wow. So Royal says she needs the money, kind of take her daughter to Disney this year. I get it. Getting money is good. We're going to talk about that too, what we do with it and all that stuff. So real quick, let me get my notes together because we're going to talk about some other things. So really, now that we're going to this is the first thing I want to kind of talk about here. Here's next, right? What is a tax return? Let's kind of really talk about what is a tax return. So a tax return, in its most simplest aspect, is simply a reconciliation statement. Now, for those of you who may not be familiar with the accounting terms, when you reconcile something, you are just simply matching up this with that, right? And so this is going to say the IRS is matching up what they received on their side versus what you are reporting. That's what a tax return is. So just because you didn't get the form on this end doesn't mean the IRS didn't either, because that's why you get them lovely letters, commonly known as the CP 2000. If you get a CP 2000, it's not an audit, okay? Don't panic. Don't freak out. Open the letters. As a matter of fact, anytime you get a notification from the IRS, make sure that you open it, okay? Don't throw it in a pile, throw it in the trash, because it could be something simple. If you did not report something that the IRS received, they're going to send you what's called a CP 2000 and say, hey, Tyrone, this company said that they paid you. However, we didn't see that on your tax return. So something needs to be corrected. That's all that says. That's an easy fix. Either you did report it and they just don't see it on the tax return and we can respond to them and say that, or you didn't report it and we need to amend it and correct it. Either way it go, don't ignore it, because if you ignore it, they're going to make the assumption that they're correct, and they're going to say, based on our assumption, you now owe us X amount of dollars. And that's what we don't want to happen. Therefore, make sure you always open your letters and respond, because it could be something minute. Again, back to the original statement. What is a tax return? It's a reconciliation statement. Your tax return, it just shows you, let me see, bring this up here, right? So this here, this is the tax return. So if we look at it, right, let me kind of make sure you can see it, put it close to the camera. I don't know exactly how this is going to move myself. So here in this area, we're reporting simply all of your income. Okay, everything. If you ever look, because this is really what I want you to do, right? If you filed your taxes and your tax preparer is giving you your tax return back, grab it, take a look at it. That is the one thing that in order to really understand our finances, we have to be able to read this tax return. Maybe I'll do a complete video on how to read the tax return, but look at it. This area here, like verses 1 through 7, lines 1 through 7 reports all of your income, all of it, right? From your wages to your business income, to your investment income, to your rental income. All of that is reported on lines 1 through 7, right? Right here on the first section of the 1040. Then at the bottom, right, like toward the bottom, we subtract out any adjustments that the law that we're allowed to take by law. We subtract that out, and then we end up with what's called our taxable income, because that's the thing. You are not taxed on every single dime, right? You start off with your gross amount, you subtract out any adjustments, and what's left over is the amount that you actually pay tax on, right? So that all happens on the first page of your Form 1040. Then we go on to the second page, and on the back side here, right, we take our taxable income, and this first line right up here at the top, that's going to be the tax. The tax that the IRS says, based on your taxable income, this is the amount that you are responsible for. And that's the key difference. I'm not going to say this is the amount that you owe. This is the amount that you are responsible for. Then as you move down here, depending on if we have self-employment, we have the self-employment tax on there. Then we end up with our total tax on line 24. And based on that, you'll see, again, this is not the tax you owe. Line 24 is the total tax that you are responsible for. Right here, line 24. And then now you can see as it moves over to the side here, is moved over to the left, you'll see your payments, right? Your income tax withheld. And that's going to go to line 33, which is going to be your total payments. And so what happens, we compare line 24 to line 33, your total payments, and it's going to be one of two results. You're either going to get a refund or you're going to have a balance due. If you have a balance due, it's because, well, you failed to pay the correct amount. Very simple, right? Very simple here. Man, to see everybody joined here. So welcome to everybody here. Miss Add One Tax Prep says that, hold on, I'm messing all up on Instagram here. I saw a message. Hold it on. Notices, we talked about the notice. It's important. I tell my clients that they need to look before they sign. And yes. Yeah, man, I'm glad you said that, Admiral. You're going to have to come on here and join me this evening, because where's it at? Which one am I looking for? I don't know if y'all can see this, but down here, I'm going to try to put it close. There's where you sign at, right here in this area, where you sign, not where your tax preparer sign, where you sign. It says, under penalties of perjury, I declare that I, meaning you, have examined the return and accompanying schedules and statements, and to the best of my knowledge and belief, they are true, correct, and complete. Now, I'm not a lawyer, right? I do watch a lot of CSI, watch a lot of SVU, right? So I know some of the terms, but perjury is a crime, or should I say an offense punishable by law. So when you sign that tax return, you are giving a legal declaration that you have reviewed it and that you have said that, you know what, I looked at this tax return and everything on here is correct and true. And if anything isn't correct and true, then guess who's responsible? You are. See, a lot of y'all think that a lot of things fall back on the tax preparer. That's why you go to a tax preparer, because you be like, well, I paid you to do it, so you're responsible. That's not how that works in the court of law, especially in the IRS courts. That's not how that works, right? you are responsible because you signed it. Yes, you can probably go after your tax professional on a personal basis, maybe in like something civil, something like that. But in the IRS courts, you are the individual that's responsible for the information on your tax return because you are the one who signed it under penalties of perjury. All on you, 100%, none you can do about it, all right? So with that being said, next question, or next thing I want to talk about, why do I owe? This is a question that we as tax professionals get a lot. Why you owe? And really, I just said it. I really just talked about that. It's a very, very simple reason why you owe. And to all my tax professionals here, like my girl Maria is here. I see you. Welcome. Thank you for being here. The answer is simple. You owe because you didn't pay enough. That's really it. I'm gonna let that sink in for a minute. You owe on your tax return because you didn't pay enough. Think about that. Let's unpack that for a minute, right? Because I just went over it. I just said it, that your tax return is a reconciliation. You take your total income, right? You minus out your deductions and you arrive at your taxable income, the amount that the tax is going to be applied to. And even still, the tax is a progressive tax system, meaning that not all of your tax is taxed at a single rate. Like some of your income is taxed at 10%. Some is then taxed at 12, some at 15. And the higher it goes, only that amount that's over the last amount is the amount that's taxed, if that makes sense. But so once we arrive at your taxable amount, then we compare that. And that's why I say your tax return reveals a lot about you and your financial discipline and your financial knowledge, right? Because if you are on top of your finances, which we should be, if we are looking to be wealthy, if we are looking to be successful in the area of wealth building, we have to be extremely mindful and aware of our finances, right? So you are supposed to know how much money you're bringing in every time you get paid. Every time you receive money constructively, you are supposed to tally that up. Like you're supposed to know. And I get tax laws change. So it's, depending on like this year, probably wouldn't have been the best example to talk about because there was so many changes, especially if you were receiving unemployment. Then they decided to say, hey, we're going to forgive up to $10,200 of it. So we had to account for that. But for the most part, you should be able to say, this is how much money I made. Based on how much money I made, then I have to look at my scenario. Am I married? Am I single? Do I have children involved? You know, what am I entitled to, right? Because again, all of this information is not, I don't want to say it's easy, but I'm also going to tell you that it is not hidden because you can look at a tax return, like even, let me see, where's it at? So right here, if you look at this side right here, it tells you the standard deduction for individuals who are single, standard deduction for people who are married, filing joint, if you're head of household. It gives you the number. And I mean, I know people say taxes is difficult because I don't like math, but if you look at this form, there's no calculus on here. Like there's no algebraic expression. If we look in line 9, it says add, right? If you look in line 11, it says subtract. So it's not that complicated to get like a good grasp on what's happening with your tax return situation, right? So again, take your total income, subtract out your deductions, arrive at the taxable income. We look that up on a tax table, and then you compare, did I pay enough? So if the IRS says that I'm responsible for a $7,000 tax, did my withholding cover that $7,000? If the answer is no, well, then guess what? You owe. That's very simple, right? So to all my tax preparers who are watching, next time your client asks you why they owe, direct them to this video because the answer is simple. You didn't pay enough. That's really there's no other explanation as to why you owe taxes. Now, I know what as a tax payer. You are not necessarily asking, why do I owe? You're asking us as tax professionals, what did you not include? What did you not deduct? What did you miss? That's what you're really saying. And I get it, right? Because when you say, why do I owe? You don't want to know why you owe. You saying, what did you not include? You missed something. You did something wrong because I shouldn't owe. And if that's the case, then we ask as tax professionals, well, we're going to review all the documentation that you gave us. Let's make sure, right? And if the result is, well, no, we've entered everything you gave us. We entered everything you gave us, right? Because we can't guess at anything. There is no guessing at the number. There is no looking up at the ceiling and trying to wait for numbers to magically appear. There is none of that. We must be able to know, right? Again, going back to that financial discipline, right? So as long as you give us everything and everything is in there and you still have a balance due, it's simply because there wasn't enough paid. But here's the thing. We do taxes at the end of the year. So what you should be doing throughout the year is tracking everything, right? Being on top of your finances, right? Like I'm reading this old book. It's a very old book. I think I'm reading the second edition. It's called I Will Teach You to Be Rich, right? And it's by Ramit Sethi. Some of y'all know who this is. Some of y'all probably read the book, but it's very interesting. It talks about how, the key to wealth is very simple, right? If we apply these very simplistic principles, then we can accumulate wealth. And the very simple principle is spend less, invest more, right? Spend less money, but we have to know what we're spending money on. A lot of us, we get the money and we just spend it. We don't really know what we spend it on. We know the fixed assets. We know that we spend money on the roof over our head. We know that we spend money on the food that goes in our belly, our clothes and our transportation. But outside of that, are we really tracking like how many times we go to Starbucks? Are we really tracking like, how many little $5 things that we bought at Walmart, right? Because if you buy that thing 20 times, that's $100, right? That adds up. So are we really tracking those little things? But that's the difference between those who accumulate wealth and those who don't, is the fact that they are detailed in the fact that they are watching what they're spending. So if you are shocked, at least from my opinion, if you are shocked at the amount that you're paying in taxes, that's because you're not financially disciplined enough to know what it is you are bringing in and spending out, right? So again, that's something that our taxes tell us. If we owe too much, maybe we're not being conscious enough, especially my business owners, right? If you are 100% self-employed, like there is no W-2, there is no anything, you should be really paying quarterly estimated taxes, because there is no way of avoiding paying taxes. I'm sorry, there is no way to avoid paying taxes, my people. If you want to pay zero taxes, make $0. That's really the only way that you can pay zero taxes. I've heard people say, oh, no, there's a way you can pay zero taxes. And they go into this long, very intricate, detailed strategy. And I'm like, technically, there's still taxes being paid on this other end. Yeah, you may not be paying taxes on a lot of the assets that you're accumulating, but you're still paying taxes as an individual, right? So they tend to leave out the part. They only want to give you the glamorous part so you can fall for that. But like, there is no way to avoid paying taxes. So you might as well treat your tax payments like a regular bill. Treat your tax payments like a cell phone bill, right? Like if you waited to the end of the year to pay your cell phone bill, it would be huge, right? $3,000+, right? But if you pay it monthly, like you do your cell phone bill, if you pay your taxes the same way, then at the end of the year when you file, you're good. And then you avoid penalties that way too. So unpacking the tax return, what we're talking tonight, it's important. If you are owing money, that says something about you financially as far as your discipline of tracking what you owe, what you pay, because simply owing money means that you fell short. Okay. Keep in mind, like, one of the big things, especially with my high earners, when you're taking stocks from a company, right? Like you have to account for that, right? Because one of the things it triggers is the alternative minimum tax, depending on the type of stock transaction you're taking from your company, especially in ISO. Okay, those trigger AMT. So we got to be mindful of that. Like before you do it, I guess in everything I'm saying is before you do what you're going to do financially, have a conversation with a tax professional, right? Don't be afraid to spend a little money to have a conversation with your tax professional. I'm saying spend a little money because tax professionals, their time is valuable, right? Like I know you figure, well, I already paid them the one time. Yeah, and you paid them that one time to spend that one time to prepare your taxes that one time. Any other time outside of that spent, well, that's their time invested. So be prepared to spend that with them. But that investment of time spent can save you so many thousands of dollars. Like I had a client this year paid $75,000 just in AMT. And for those who don't know what AMT is, that is alternative minimum tax. Look it up. I don't have time to get into it now, but $75 in AMT versus if he could have just spent, I would say even maybe if he would have paid $100 for us to have a 1 hour conversation, we could have completely avoided a $75,000 tax. But what happens is when you do what you do, it's already too late. By the time you come see a tax professional, it's already too late. What's done is done. We cannot go back. Oftentimes we cannot go back and rectify what happened. We just got to deal with it and say, well, next time don't do that again, right? So make sure that we are mindful of what's happening financially. If you know you are getting ready to do something major financially, please make sure to have a conversation with a tax professional. All right. Don't be afraid to spend a little change. If you got to spend $100 to save $1,000, then by all means, you just came up on 900. Okay. Perception is everything. Excuse me. Man, I see some questions coming in. Let's see. AJ says, how do big businesses not pay taxes? I'm glad you asked that question because we'll talk about that. But first now, let me make sure I talk about this. I know y'all gonna hate me for this one. I'm gonna just leave it up. I want this to set in for a while. I'm gonna just let this one kind of, I don't know. I'm gonna just, because I know right now it's like sounds crickets. Like nobody's happy that I said this right now, right? Like, yeah, refunds suck, and they do. Here's why refunds suck. Right. To me, it's on the same line as owing. If you owe, that says something, right? That means you're not managing it well. If you get a refund, it says the same thing. You're not managing it well, because what is a refund? A refund is simply a return of your capital. A refund is simply your money given back to you. Simple as that. Okay. If you get a refund, it's because you gave too much money up front to the government and they held it for a year and gave it back to you at the end of the year. But while they held it, guess what they were doing? They were making money off of your money that you allowed them to hold for a year when you could be making money off your money. But instead, you gave it to the government and said, here, hold this for me, and I'll get it back next year. That's what a refund indicates. And I've heard the argument that a refund is a forced savings account. No, one, because there's no interest. You don't get you earn no interest on your refund for that year, right? That's the one problem I have with that theory. And two is the fact that when you get it back, you don't save it. You spend it. So it's not a forced savings account. It just makes an individual feel good because they're receiving this large sum of money at one time that they didn't use throughout the year. So it's like I didn't account for it. Therefore, I saved it up at the end of the year. So I have this big check coming to me and it's like, yeah, I did something right. No, you didn't. Refunds suck, people. It is worse than owing, to be honest with you, right? Because you literally gave somebody your money. At least if you owe, you only going to pay them what you owe them and not a penny more, right? Like, at least like, okay, yeah, I owe you that much. Cool. I'm good. I'm done with you. But a refund, that just means you blindly gave somebody some money. Like, I don't know how much I owe you. Okay, you say I owe you $5, but I'm gonna give you $100 just in case. That don't make sense to me, right? Like that honestly don't make sense to me that we do that. And in the case, especially for my small business owners, right? For my entrepreneurs, for those out there on the grind, getting a refund from your business means that you are not in control of your finances. If you are 100% self-employed and you get a refund from your business, that means that you are not tracking your income at all. That means that you are just giving money in hopes that it covers a certain amount. And if that's the kind of mentality that you have, your business is going downward, because finances, cash is the lifeblood of the money. And if you're leaking it, man, you're going to drain the business. Business ain't gonna have no money to operate. It's gonna go down the drain, right? So that's why refunds suck. We really got to get out of this refund. We really got to get out of this mentality of wanting a refund. And I get it, because we're inundated with social media, with these commercials. It's refund season. It ain't even tax season no more. It's refund season. Who can guarantee the highest refund? Like, they do that kind of manipulation to get you excited, because they can charge you up the yin yang to get you something that's yours. Why are you paying somebody to get you your money back? I'll probably just expose the whole industry, and now they're going to come get me. But I'm saying every tax season, we see the ads, the highest refund possible. Really, you're just paying somebody to get you your money back. Refunds suck. And I get it that there are some scenarios that you just cannot avoid getting a refund, right? Like if you have young children under the age of 17, your income was in a certain bracket, they give off certain credits and things like that. So there's an automatic refund. No matter if you paid the right amount of withholding or not, you still get a refund. That I get. But even still, from my perspective, I don't want a refund, because if I get a refund, like I got 3 kids, me getting a refund says that my income was under the federal poverty level. It was low enough where the government was like, you poor, we going to help you out. We going to give you a refund. Why? Because you got kids and your income ain't enough to take care of them. So we going to give you some money. That's what that says when you get a refund, when you have kids, to me. So I don't want a refund. I don't want the government to look at me and be like, you broke because you got kids. We going to give you some money. I want them to look at me and be like, you know what? You good. You don't need no money. We ain't give you no refund, right? It's all about the mentality. Refunds suck. And I'm definitely going to do a video about that, really going into detail about the refunds and how we get manipulated into thinking that having a refund is the greatest thing, when it really is the most terrible thing in the world. And if we're trying to accumulate wealth, if we're trying to generate generational wealth, we got to get out of this habit or this mindset that we need refunds, and refunds are the greatest thing that the government has done, because it's not. All right. So next thing. All right. This is important, because this right here really is the reason why I say there was a lot of come to Jesus moments this year, because people really found out that, there's a lot of people that use a tax return for information. Okay. So when I'm saying who, excuse me, who uses a tax return? One, realtors, real estate company. A lot of people wanted to get into the real estate game this year, or at least the people that I dealt with from my client base, right? A lot of people wanted to get into real estate, and what they asked for, well, we need 2 years tax return. Why? Because your tax return is a tell-all. Your tax return tells everything about you financially. Your tax return is very similar to your FICO score, which is the adult credit card, right? That's what I call your credit score. It is your adult report card, similar to your tax return. Everybody that's going to deal with a major financial transaction is going to request your tax return. Why? Because they are going to look and see how much money you made. Because like I said in the beginning, there's a lot of things reported on the tax return. How much money you made, how much money you spent, how much you owe or don't owe. And they take that information and they use it to say, are you credit worthy? Can we give you this large sum of money and trust that you're going to pay it back? Because using your tax return, they're going to determine your debt to income ratio. They're going to use the tax return to determine your interest rate. So many things are going to be used by your tax return, right? Like all of my business owners, my self-employed individuals, we realized that if you wanted to get that PPP, even that second round of PPP, what did you need? Schedule C from your tax return. You don't have that, then guess what? Application may not go through. I know that there were some banks that was allowing you to use bank statements. Some was allowing you to be self-certified. But at the end of the day, what did they want? Information from a tax return. So it's real important going forward that you absolutely make sure that your taxes are in order. And again, tax return is simply just a reconciliation between what was reported to the IRS and what you reported to the IRS, right? So there's really no point of leaving anything out, right? I hope all that makes sense, man, because I guess the goal of me being here is really to get you to understand, like, we got to stop playing. If we trying to get to the bag, get to it, but learn to keep what's in it, right? We all about getting the bag. Getting the bag is easy. You could just go get a bag right now, but can you put something in it? Not only can you put something in it, can you keep what's in it? Because that's the point. What's the point of having an empty bag? Right? Like, even if you bought the bag, you probably can't sell the bag for the same amount that you paid for. So that's a loss off top, right? Unless it's what the ones, them Birkin bags, right? If you can afford a Birkin bag, you may be able to resell that one at a higher value, right? But then, did you really make a purchase or did you make an investment? Just saying. So the goal, get the bag, put something in the bag, but then keep what's in the bag. Don't just lollygag with your money. Keep it, get it going, and you good to go. Hold on here. Yeah, so that's really what I want to say. I wanted to make sure that I tackle that. So then I guess the last thing is, anybody got questions? By all means, let me know. Let's talk about it. If you want to join me live to ask your questions, feel free to do so unless you're shy. I get it. But I am going to go ahead and kind of look back through here and see if I missed anything as far as questions. I see a lot of people drive. I appreciate you being here. Hold on, I'm still trying to figure out how to work this. Let me wave at folks. Didn't get a chance to wave at. I see you. Hey, look, my sister was on here. I wonder if she's still here. She gone? Let's see here. Somebody said don't have enough deductions. I mean, yeah, it's possible to have enough deductions. All right, no, let me answer the question from AJ that says, how do big businesses not pay taxes? Or is the business paying taxes and the owner doesn't? Man, that is probably one of the greatest, or should I say, probably one of the most intelligent questions as far as regards to that argument that businesses don't pay taxes. Because one thing that a lot of people don't consider is the fact that you're dealing with two people. You have the business and then you have the owner of the business, right? For example, Amazon. Amazon is a corporation, right? Jeff Bezos, the owner of Amazon, is an individual. So you have Amazon, then you have Jeff, right? Two separate people, two separate tax returns. And a lot of time when people are trying to figure out, well, why they didn't pay taxes, well, you're only looking at Amazon, the corporation, not necessarily Jeff Bezos, because I'm sure nobody has seen Jeff Bezos' tax return because it's his personal tax return, and therefore it's not privy to public scrutiny. Therefore, his personal tax return is private and not in the equation when we're talking about Amazon. So keep in mind, how do corporations work? Well, corporations cannot pay zero taxes because they can pay their employees their entire profit and the corporation itself pays nothing. That's just one way. Think about it. There's a lot of credits for corporations and things like that. And then you got to also consider that I'm going to tell you to read the article of what's going on with Amazon in Seattle right now. Amazon is in the position of negotiation. They're told the city of Seattle, like, hey, if we come build a couple of warehouses here, we're going to bring jobs and we're going to bring a better economy with us. So in exchange for that, we don't want to pay sales tax. City of Seattle, or should I say the state of Washington, city of Seattle, they have some thinking to do. Do we want to say no to Amazon and don't have them come and there goes our economy and the people can't have jobs? Or do we want to say, we'll let you slide on sales tax because if we don't, you not paying $6 million in sales tax and compare that against $12 million in revenue, well, we win on that end. So certain companies have a little bit more negotiating power. That's one way. That's another way people don't pay taxes, the fact that they can negotiate like that. But a lot of times when we're seeing these companies not pay taxes, it's because they've carried over what's called a net operating loss. Like Amazon wasn't always profitable. Let's keep that in mind. Again, we're talking about Amazon, not Jeff Bezos. We gotta be able to separate the two, right? We're talking about Amazon, the company. Jeff Bezos is what they say, I think, the world's richest man. So he pays taxes. We just can't see his tax return, right? So we ain't worried about that. But Amazon, the big company, wasn't always profitable. And so therefore, when the company was taking these losses, those losses got stored up. And there's something in the tax law, the net operating loss, that says you can carry that loss forward for however many years. Currently, I do believe it's 20 years, right? So when Amazon first started, all those losses that they accumulated, well, guess what? When they finally started to make profit in a year, they got to bring those losses forward, and that wiped out the profits that it had, and therefore they didn't pay taxes. Why? Because the losses zeroed out the income. Therefore, there was nothing to tax. That's the tax law, which is why it's really important. I'm saying this to my business owners, right? Track everything. If you take a loss, take it, because you can carry it forward to the years where you have a profit and then zero out your own taxes. And you can be like, yeah, I made money, but I ain't paying no taxes. People, how you do that? Well, I had a loss back in 2020, or I had a loss back in 2019. And then when I made a profit in 2021, it washed it out. And then whatever's left, I'm going to carry forward until 2022. I mean, that's how the game is played. So we can't get caught up with all this other stuff like I ain't going to write this off or I ain't going to claim all this. No, do it the right way. Do it the way it's supposed to be done. And then when you win, you really win legally. Like I said earlier, Biden is giving so much money right now to the IRS enforcement because they are getting ready to really increase going after taxpayers who aren't reporting everything, taxpayers who aren't paying everything. Like, we're about to see a bunch of letters go out, about to see a bunch of whole bad things happening as far as IRS enforcement and collection goes. All right. So all of that, just go ahead, make sure you get everything ready to go and you'll be good to go. All right. So I hope that answered your questions, man. I appreciate everybody being here. What's up, cuzzo? I see you. I'm trying to wave, but I guess I can't wave at people, maybe because they left. It was just showing me there. Yeah, I think that was all the questions there. Nobody else has any questions. I'm going to go ahead and kill it for tonight, man. Yeah, I think that's it for me, man. So, yeah, hope I answered all of y'all questions as far as unpacking your tax return. Again, at the end of the day, this message was simply get it together, get it right. Don't play around with your business. Don't play around with your personal income. Don't owe. don't get a refund, right? The goal is to file the perfect return where you have a zero balance due, zero refund. I'm gonna say probably within if you can get it within $100, either way, where you may owe $100 or you get a refund of $100, that means you on top of your game, you on top of your, and then you good, right? So that's what it is there. Oh, we got another question here from Sweet for God. Says, my question is, make sure, what do I need to be a legit business? Oh man, such a beautiful question. My business will consist of shirts and custom party favors, chips, bags, water bottle. Man, I'm glad you answered that question. And I get so excited because the answer to that question is simply, what do you need to be a legitimate business? Is simply, you need a paying customer. That's it. If you don't have a paying customer, you are not a business. You can do everything up until that point. You can spend all this money, waste all this time, do all this stuff that everybody and their mama is telling you to do, get an LLC, do this, do that. And if all of that does not result into a paying customer, you do not have a business. Only until that moment where somebody exchanges money for your product or service, you don't have a business. So to be legitimate, right, which means to be legal, one thing you must get is a paying customer. Then if we're talking about, okay, I got paying customers, now I want to make sure my business is legal. The only thing you have to do is make sure that you get your business license, right? That's permission from the city that you are in to say, hey, I'm operating in this city. I'm operating from this physical location within this city. So therefore, I want to make sure I have permission to do so. Get the business license and then make sure you're in compliance, right? Like if you're selling tangible items, make sure that you are registered with the sales tax department of your city. So that way, when you collect sales tax, you can pay it to them. And once you've done that, as far as the legality goes, you're good. Notice what I didn't say, though. Notice I didn't say you need to get an LLC. Notice I didn't say you need all these type of entities and corporate structures and EINs and tax ID. Notice I didn't say that, because to start your business, you just need a paying customer. Then as things grow, then we look into all that other stuff. I said the video, Paul, but I don't know. So yeah, notice what I didn't say. Just focus on getting your first paying customer. Focus on being legal in the state or in this place where you physically are, right? Make sure that whether that's a business license or certificate, make sure if you're selling tangible things, you got your seller's permit and you good. And that's what makes you legal. Everything else is ancillary. It's optional, right? It's all about getting to the money first. Cool. Hope I answered that question for you. Man, so yeah, again, it's, as the Floyd, you say, it's getting late, right? It's time for us to go. Didn't really want to be before you long. Just wanted to hop on here as promised to go live to unpack your tax return. Remember, my people, get it in. Make sure that you are ready for it, because this year, we got a lot going on this year. I want to see everybody win this year, 2022, right? At the end of 2022, come December 31st, 2022, 2021. I'm already excited for 2022. At the end of 2021, December 31st, 2021, we're getting ready to go into 2022. We should look back and say, you know what? I did it. I was on top of my finances. I'm excited to file my taxes, right? Because I'm either going to have a refund of less than $100 or I'm going to owe less than $100. Because if that happens, then I'm on top of my finances and I can only go up from here, right? That's the goal. So with that in mind, right, I got a whole bunch of things coming out. I'm actually trying to put something together that can help us actually do that. Like, how do we stay on top of our finances month to month? How do we track that month to month? So I'm working on something that's going to actually help us understand that. I don't know how I'm going to deliver it yet. I guess I'm going to have to get with my girl Donna from Brill Ass Technical Writing. We're going to create a process map that's going to show everything on how we going to get it done. And we're going to go from there. So, man, just know that I love y'all, man. And y'all have a great weekend. Enjoy yourself. Y'all be safe out there. And be good with the money, man. So yeah, until then, y'all know that I love you, and I will see y'all later. See, my wife joined here, but it's too late, baby. I'm getting off and I'm coming home to you. Love you.